All right, well, the current pullback seen across major averages spurred by investors recalibrating the outlook for Fed policy. But a crowded week of earnings could bring plenty of future market catalysts. We've got the Mag 7 member Tesla set to report tomorrow. For more on this, we are joined by Kenny Polcari, Slatestone Wealth's Chief Market Strategist. Kenny, great to speak with you.
Thank you for having me.
Being here.
Always a pleasure to come.
So is the Mag 7, I mean, this is so boring, but is it going to be
So listen,
the saver of the market?
To the point, just what we've been talking about, right? Is the market stretched? Sure, it's stretched. Should it pull back? Of course it should pull back. I'm actually, as a chief market strategist and a wealth manager, I want to see the market pull back because I can't put money to work exactly to the point. I don't want to chase stretched names and stretched sectors, right? So I'm actually waiting for the market to pull back. It should have, the September to October timeframe is really the time that it does that. They've managed to prevent the market from really pulling back. I think the Fed is kind of responsible for that because I don't think they wanted a lot of chaos going into this contentious election. Mm-hmm. So I think that one less thing they needed. But I do suspect that we will see a pullback, and I welcome it. Now, the Mag 7, I think AI is going to absolutely continue to crush it. Dan Ives from Wedbush came out with a great report the other day talking about now the second derivative of AI, right? So you're going to take just away from the Mag 7, you're going to start to think about the other names down the list. So Cisco, SAP, IBM, Oracle are all names that he thinks are going to start to join, in this tech boom. I agree with him. I think tech is the place to be. I don't say you should chase it up here. Let it pull back and then jump in.
And we certainly are seeing some of that excitement play out this morning on the heels of the SAP's quarterly results. But Kenny, I guess how much of this hinges on the Fed still cutting? Because I know you do remain optimistic about that.
Yeah. So here's the deal. I think the Fed was too aggressive in September. I was in the camp that they should have gone 25 basis point moves. Not really sure that the economy was necessarily as weak as they thought. Then, and I think that's what they had prepared the market for. Yeah. And then they went into the quiet period, and suddenly, the Wall Street Journal publishes that story, and Goldman Sachs comes out with a breaking report. And, that's the way they leaked the story out to the market, that they changed their mind. And so, in fact, they did. They cut 50 basis points, and Jay Powell came out and said, well, we're concerned about the labor market. In fact, the data shows that the labor market is not nearly as weak as he suggested. So now, I think the Fed's in a position where maybe they do nothing in November. And I think the market has to just get used to that because, they talked about a fairly aggressive rate cutting schedule, something that I never agreed with because I don't think the economy is as necessarily weak as they say. And by the way, they're going to cut rates 50 basis points, 75 basis points. It's not going to bring down the price of chicken and steak and eggs and milk. Mm-hmm. The only thing that's going to do that is if they let us go into a recession, and then the prices of that stuff will come down. But if they don't let us do that, then we're going to have to get used to the elevated prices. Yeah, we might have a soft landing, but the prices are going to remain elevated.
That's not going to stop companies from citing that in their earnings prints, though, right? We already had Amazon talking about softening consumers. Sherwin-Williams this morning, the choppy environment.
Right. They're suggesting that it's a softening consumer, but when you really look at some of the retail sales, look at that data last week. It was stronger than they expected.
So then how do you separate the winners from the losers?
Isn't that's the $1 million question, right? So you can't, in terms of investing, so you can't necessarily go out and just blanket buy a passive. I mean, I get you can, but if you're really trying to be strategic about it, you really have to pay attention, and you got to listen to what the forward guidance is and who's giving the upbeat guidance, who's giving what they think is more realistic. Even if it's a softer guidance, it's got to be more realistic. So you kind of have to do your homework. You have to listen to what they say. You have to understand the sector you're in. And where you're looking to put that money to work. But I think there's still a lot of opportunity out there, but I'd like to see the market pull back.
So talk to us a little bit more about that specific opportunity. I know you mentioned the second derivative players when it comes to AI, but some of these chip names that we have seen reports so far, you had TSMC last week, then you also compared that to ASML. What does that tell us just about that bifurcation?
So now listen, that's a very interesting deal because ASML, which by the way is the largest European tech name, the largest, they have basically a monopoly on lithography production of the chips, right? They own that space. So they came out on Monday and they surprised the markets with, they missed on their estimates and they gave reduced forward guidance or cautious forward guidance. And you saw what they did to the stock. They took 22% out of the stock in 2 days, partly because investors don't like to be surprised. If ASML knew they were going to miss it, had they forewarned, investors would have been disappointed. They would have taken some out of the stock. But the fact that they got hit upside the head on earnings day, right? I think caused an overreaction. But look, ASML is not going anywhere. And then Taiwan Semi comes out and reports explosive numbers on Thursday. And guess what? They're ASML's biggest customer. So there's a disconnect somewhere, right? ASML sees weakness, but TSMC says the demand is so great, it's unbelievable. Yep. So I think the opportunity is ASML. I think they overreacted. I don't think the guidance is as negative as ASML thinks it is. I mean, look at the other names that are coming out. I mean, we'll see next week when all the tech earnings start to come out, right? I did not see SAPs this morning. What did they? Was it good or bad?
It was very good. It was showing that just that their transition to AI and what that is ultimately doing for their cloud demand going forward, and some of their projections playing into that, which is what you're saying.
Right, exactly. And the other thing I think you have to think about, and it's one of my favorite names, and I own it, so just to be clear, is IBM. I think IBM is one of those names. You know, it was big blue. Everyone looked at it. It was like kind of this old stodgy stock. I think it's reinvented itself in the cloud space. It's making great moves. I can't wait. I think they announced tonight, actually. Their earnings are out after the bell, I think tonight. But it's been a great performer this year. And guess what? They pay a nice dividend for owning them. So you're getting two things there.
We certainly are. We're going to be speaking with Arvind Krishna. I will be speaking with him, the CEO of IBM, at our Invest conference coming up next month. So we look forward to that. Kenny Polcari, always great to have you. Thanks so much for joining us.
It is always a pleasure to be here. Thank you very much.